Blue chip stocks are essential for investors seeking long-term stability and growth. These companies have a proven track record of weathering economic storms and delivering consistent returns. By the end of this video, you'll know exactly what makes a stock a blue chip stock, and I'll even share with you some of the best blue chip stocks for 2025. Hi, I'm Noah Davidson, and I'm an investor, a trader, and an educator with over 25 years of experience helping tens of thousands of people go from not knowing what they're doing in the stock market to knowing what they're doing and having a great game plan. Now, what exactly is a blue chip stock? In this video, I'll break down for you what exactly makes a stock a blue chip, the pros and cons of investing in blue chip stocks, and examples of some of the best blue chip stocks in the market right now for 2025. And if you stay till the end, I'll share my personal take on which blue chip stocks might be worth your attention this year. The term blue chip originates from poker, where blue chips are the highest valued chips in the game. In the stock market, blue chip stocks represent the largest, most well-established, and financially sound companies with a history of delivering reliable returns regardless of what's going on out there in the economy. Think household names like Apple, Microsoft, Johnson & Johnson. These companies are leaders in their industries and are known for strong balance sheets, steady earnings, and robust dividend payouts. In fact, you probably own or have in your household or are using their products. Odds are you've got an Apple iPhone. You might be watching it on that. You might use Microsoft software every day in your business. You probably have products by Johnson & Johnson in your medicine cabinet, not to mention all of the other great medicines and vaccines and things that Johnson & Johnson creates. These companies create and provide for us the products that we all use in our day-to-day lives. Now, there are some pros and cons to investing in blue chip stocks. Some of the pros are stability. Blue chips tend to be less volatile than other stocks out there in the market, making them ideal for conservative investors. Dividends. Many blue chip companies pay consistent dividends, providing reliable income streams quarter after quarter. Now, not all blue chip companies pay dividends, but you can choose blue chip companies that are still in growth mode, or you can choose dividend paying blue chip stocks that again can help your portfolio grow with consistency over time. Some of the cons of blue chip stocks is that because they are large, well-established companies, they might experience lower growth potential. Since these companies already are established, they may not experience the rapid growth seen in smaller emerging companies. Higher entry price. Blue chip stocks often come with a higher price tag, which could be a barrier for some investors. But remember, price is what you pay, but value is what you get. And when it comes to blue chip stocks, we don't necessarily care about the price. What we care most about is the value. Let's look at a few companies that continue to shine as blue chips. Apple Computers, ticker symbol AAPL, a technology giant known for innovation and a strong brand. You probably own an iPhone, and wouldn't it be great to own a piece of that real estate in everybody's hand? You probably watch Apple TV. Or maybe you've got an iWatch, or you have an Apple computer. These are innovative products that people love. They stand in line to buy Apple whenever they have a new release. There are early adopters there to buy the new iPhone, to get the new iWatch, to try out the new gadget from Apple. Plus, Apple is expanding into the field and one of the front runners in AI. I. Apple's a household name. Of course, you know that. They're a technology giant, one of the single largest holdings in the S&P 500 index, the NASDAQ 100, and one of the biggest holdings in Warren Buffett's portfolio. And if Uncle Warren gives you a thumbs up on Apple, well, that's a good idea. Microsoft, a leader in software, cloud computing, and artificial intelligence. Not to mention, they've got some great games. Microsoft is a proven asset, ticker symbol MSFT. We like Microsoft because they are a perfect example of a blue chip company that's been around for about 50 years and proven that up, down, or sideways in the market, Microsoft is a strong contender. Johnson & Johnson's ticker symbol J&J. Isn't that a great ticker symbol for them? A healthcare powerhouse with a diverse portfolio of drugs and healthcare products, ranging from over-the-counter products you probably have in your medicine cabinet to high-tech medical devices. Johnson & Johnson is an industry leader that pays a dividend and is a stable blue chip stock. Coca Cola. Doesn't a Coca Cola sound great right about now? Ticker symbol KO, which, by the way, the ticker symbol for Coca Cola is KO because investors knew right away that Coca Cola was going to be a knockout. We're talking about a company that's been around for well over 100 years, and even though they took the cocaine out of the original formula, people are still addicted to the stuff. They love it. They buy it by the caseloads. You probably have some in your fridge. Wouldn't that be a great asset to own? Because Coca-Cola is not going anywhere. In the next recession, you'll probably still buy Coca-Cola. People love Coke. Coca-Cola has probably the largest market share in the beverage industry. And again, household name, household product, a cultural phenomenon, a sound investment that, by the way, pays a pretty darn good dividend, and the options on Coca-Cola are ideal for strategies like covered calls, selling cash secured puts, and they are a highly stable stock that's not too expensive for the average investor to buy some shares of Coca-Cola and make that one of the foundational blocks, one of the foundational cornerstones in their investment portfolio. Procter Gamble, ticker symbol PG, a leader in consumer goods, an extensive range of trusted products. You probably have Procter Gamble products in your house. You can go ahead and hit the pause button and go check in your cupboards and see what kind of Procter Gamble products you have in your household. They're a dividend payer and they have excellent options, liquid options, ideal for strategies like covered calls, cash secured puts. Buying protection on these assets is easy, and one of the reasons we love investing in blue chip stocks is because they are recession resistant. Their stock price might go down, but that just gives you an opportunity to buy more. Anytime these stocks go on sale, it's considered a good time to buy. Think of other industry leaders out there that are probably considered blue chip because of their top tier value. Companies like Alphabet Inc., ticker symbol GOOGL, one of the industry leaders. They're making tons of revenue even right here on YouTube. They are cash flow solid, a tremendous revenue generator, and a household name. A blue chip company like Alphabet Inc. would be a welcome addition to anybody's portfolio. I bet you recently ordered something on Amazon. I know I did. In fact, have you ever gone back and looked at your Amazon order history? Oh my, I think you have a problem. That being said, Amazon is another example of a blue chip stock. Everybody uses it. Everybody orders it. They are an innovator in their industry. They're participating in the AI revolution. And again, people love buying stuff on Amazon. They make it so easy. I can buy something, it shows up the same day. The convenience of it, the logistics, what they have brought to the marketplace is convenience. And people will always continue to pay for convenience. So the addition of a stock like Amazon to your investment portfolio is never a bad idea. Again, remember, price is what you pay, value is what you get. That is why we love blue chip stocks. All of these companies demonstrate the qualities that make blue chip stocks a solid investment choice: dependability, profitability, and resilience. We're looking for those companies that are recession resistant, whose products, goods, and services we are going to buy and use regardless of what's going on in the greater economy. Most of the blue chip stocks we talked about today are part of the S&P 500 index. In fact, they make up the largest percentage of the S&P 500 index holdings. And using them as a benchmark is a great idea. You'll find these types of companies in Warren Buffett's Berkshire Hathaway portfolio. And again, if you're ever looking for a great investment strategy, you can look up Berkshire Hathaway's holdings, or you can look up the top 10 holdings in the S&P 500 index, and now you're owning the same stocks that all of the big boys own, that all of the big investment portfolios own, and you get to participate in those markets with the best companies, the best assets out there. Most, if not all, of the blue chip stocks that we talked about today are a part of the S&P 500, a benchmark index that tracks the performance of America's top companies. If you want to learn more about investing in the S&P 500, check out this video here. Don't forget to hit the like and subscribe button, give this video a thumbs up, and hit that notification bell so you never miss out on another opportunity to learn more about sound investing principles here at the Cashflow Academy.